Hi guys, my name is Devrhoid and this is Beyond the Stock Price. Alright, so before I get into it, I have to tell you that all the information shared on this channel is strictly for educational purposes only. It is not meant to be taken as financial advice or as investment advice. Speak to your investment advisor. In this video, we're going to be talking about stock market basics. We're going to look at what's a stock, what's the stock market, how does the stock market work, why do people invest in stocks, and how do they make money from it. According to Investopedia, a stock is a security that represents or signifies ownership in a corporation and represents a claim on the assets and earnings of that corporation or company. If you are a owner of stock, you're basically a part owner of a business. Remember that, because that's going to be very important going forward in our discussions. So essentially, stock is just a certificate that represents part ownership in a company. Just like our certificate from school signifies that you went to school for a particular number of years, or a certificate in a course represents the fact that you have completed the course, the stock certificate just represents the fact that you are a part owner in the business. In terms of the stock market is not any different than any other market in its purest form. It's just a place that allows persons to buy and sell securities, in this case stocks. Stocks are not the only thing that can be traded on a stock market. You can also have bonds or rights issues and stuff like that. Those we will talk about a little later on in the future as we get into the more advanced or into the intermediate and advanced lessons in this video series. But for now, just take it that the stock market is a place that allows persons to buy and sell stock certificates or shares, as we call them. So in terms of how the stock market works, it's a little bit different than, say, a typical market like a fish market or a fruit market. Primary difference is that, unlike in the case of like a fish market where you can physically go there and just give somebody your money and they give you the fish, in the stock market, in order for us to purchase stock or shares, you need to utilize the services of a broker or a brokerage house. Now, the broker acts on your behalf. They basically take your money and enter your order or your instruction to sell a particular stock, if you already own it, into a system where other brokers representing persons who are willing to buy or sell their shares to you, as the case may be, depending on what it is you're actually trying to do. And so they basically facilitate the transaction of the selling or purchasing of the shares that you're interested in. In Jamaica, we have quite a few brokers. All of them you can see on the JSE website. I think I'll just insert that link right here, so you can just click there to see all the registered brokers for the Jamaica stock market. But some of them include NCB Capital Markets, Sagicor Investments, Mayberry Investments, Barita Investments, Stocks and Securities Limited, Scotia Investments, etc. In the US, there are companies like Fidelity and TD Ameritrade, and there are online platforms like Robinhood or apps that you can actually use. The Jamaican stock market hasn't really gotten there as yet, but they're currently working on it. Okay, so why do people invest in stocks? The reason is pretty simple: to make their money work for them. When you compare the returns that you get from investing in stocks as opposed to investing in other options like real estate or keeping the money in a savings account, the returns are typically higher, particularly over the long term, and so a lot of persons tend to invest in the stock market as opposed to investing in real estate or investing in oil or gold or whatever. It's also very important to note that the stock market is one of the cheapest alternatives or cheapest options in terms of actually getting started in investing and having one's money work for them. So in terms of how persons make money from investing in stocks, there are actually two options. The first option is through what we call capital gains or capital appreciation, where a person buys a stock at a particular price and the stock goes up in value or up in terms of what another person is willing to pay for it. And so the person who bought it originally can now sell the shares at a higher price and then claim a profit. That is known as a capital gain. The second option is through what is known as dividends, and a dividend is a payment. It's a literal payment, so it comes in the form of a check that the companies pay to the shareholders just as a way to reward them for originally investing in the company. The dividends are given on what is known as a per share basis. So the more shares that a person has in a particular company, or the more stock that the person has, the greater the dividend amount. We call that, in technical terms, that's known as the yield, which is the return on the investment. Okay, so that basically wraps up this video. Just to recap, a stock is nothing but a certificate that represents a part ownership in a company. The stock market is just a place that enables persons to buy and sell stocks or shares. The stock market works using brokers who facilitate these transactions or trades, as we call them. Persons will invest in stocks primarily to make their money work for them or to earn quote-unquote passive income. And there are two ways that you can benefit from investing in stocks. The first one is through capital appreciation or through capital gains, and the second one is through dividends. So I hope you learned something from this video, and I'll see you in the next one.